Welcome to another real estate industry update. We're going to talk more about the tax code and things like that. But that's just one aspect of real estate in the investment. Really, we want to be there for the whole life cycle, from the acquiring to the operating and to the exiting. And how can we help advise you to make the best of this investment so you have the highest rate of return and make it as easy as possible?
Yeah, Daniel, this is an important topic because I feel like too often I have clients who get caught up in the tax picture sometimes and take a step back from the actual economics of the deal when talking to our clients. And even I see a lot of deals. We do a lot of advisory. We touch a lot of businesses. We know a lot about the industry and we can help on the economic side, right? And so it's important. We're filming this here in September. We're deep in compliance time. It's important to take a step back and look at kind of the advisory services we can offer to and how we can help, because we have a lot of value to add here. So in just looking at kind of what's at stake in this space, so often, we get pulled into whether it's transactions or investor relations type issues, we get pulled in too late. And to my point before, a lot of times we have solutions to that, or I've seen this show before and know how to help. And so, in doing this and where we are moving as a firm and what I want with my clients is I want to be fully a part of your business. And I want to help you walk through all the things you're working through. And in the real estate space specifically, that really excites me. And there's a lot of different areas where we can add value there.
Yeah, and I agree, Kyle. I mean, I just think this is one of those areas that gets overlooked a lot, but it's a lot of value you can actually add to your clients here. That it just gets overlooked. CPAs, we get very busy and we're doing other things and we're just trying to get the work done. And we don't think about, hey, we can be there for our clients 365 days and add a lot of value, especially when the client needs someone like us and they don't have the resources themselves. They just need help. Maybe they have some resources and they just need a CPA to come in and kind of fill the gaps for them.
Yeah,
So
and
let's
a lot
kind
of
of,
times with that too. I'm sorry to talk over you, Daniel, but when you're dealing with investors and things like that, it can be helpful sometimes to say, "Hey, we have a third party helping us through this trans." I keep referencing transactions, whatever it is. Just from an optics perspective, it can be really helpful when you're dealing with investors, lenders, whoever it is, to say, "Hey, I've got a third party who's attached to my hip here, and is helping me through these things." And we definitely see value come out of those interactions as well.
and we're like we were talking about, it's really about being there for the whole life cycle. So let's kind of get into when we're thinking of advisory services, like where are we going to start out with, okay? Usually when we're thinking about it, like where's the foundation? And the foundation comes back to strategic financial management, all right? What is that? In reality, it's just aligning the company's financial resources and decisions with its long-term goals, okay? And maybe the GPs and goals, long-term goals, might be different than the LPs, okay, and the investors. So you got to think all of that in mind, all right? And the most foundational part of any real estate comes down to your accounting, all right? We're accountants, so let's talk about accounting here. This is probably the one that gets overlooked the most just because it looks like a commodity to everyone, all right? All right, I got to do bookkeeping. It's just entering numbers. It's the day-to-day mundane part, but it's all about garbage in, garbage out. All right. If you do not have a great foundation, if you do not have great accounting, then how are we going to have great results? All right. It has to have good accounting. And it comes from a lot of different layers here, like choosing the right software. Okay. Most people know about QuickBooks. QuickBooks is a great software. We use it a lot for a lot of our clients, but it's very limited when it comes to real estate. Okay. A lot of our clients outgrow it quickly, maybe for small real estate people. But it's really more about just normal trader businesses, not real estate is what QuickBooks is good at. So we need to be thinking, all right, what is a good accounting software we need to be using? There's a lot of property management softwares out there, such as Yardi, things like that, that might be better for you and your business. that are able to just deal with real estate specific issues when it comes to accounting. Okay. It's able to do it from a unit base. All right. And then from there, you're able to have all these different kind of financial reports that drill down to, like I was saying, the unit so that you can make better decisions. All right. Not just preparing tax returns and having accurate information, while that is important, but it's really about being able to have the information accurately for your needs, whether it's from making financial decisions, like we were saying, for your long-term goals, to filing tax returns, to potentially doing investor reporting. There's a lot of layers to this, and it all starts with that accounting software. This is something a lot of times your CPA can kind of help you with if you don't know. What should I be using? Okay. This is, the real estate I have. I'm buying a multifamily with, 1,000 units. Okay. Well, what software should I be using for this? Or I'm thinking about buying multiple properties. Okay. How is that going to work? Or I'm going to get into the single family portfolio. How does that work? What should I be using? And then hopefully your CPA could also be helping you in this if you need outsourcing. An accounting department is very expensive. It's very timely. Might not be worth your time going in there and hiring an entire accounting department when you could be leveraging your current CPA and their team. Maybe you only have to hire one person or even nobody and have them come in and kind of help you. Now you have experts. You don't have to worry about people leaving in the middle of the year and you're stuck with no bookkeeper, and you're scrambling to get your books done, and you're not getting accurate information. These are things you want to think about, outsourcing accounting, what property management software you should be using. This is a lot of times where the beginning of our advisory services start, because it's the foundation of your company.
Yeah, Daniel, I have to chime in that the biggest pain point I hear from my real estate clients is it's rooted, to your point, in the financial visibility and getting the timely reporting, so you can see the current economics of your deal. You can make real-time adjustments to it. You get your lenders, they're reporting timely. You get your investors, they're reporting timely. Everything's rooted in those financial statements. And so having a strong foundation around this is extremely important. And we do find, in talking outsourcing this functionality, there's a lot of clients that fit that bill that aren't at the size where they can realistically hire a full accounting department. And, we have the resources in our house, and, others do as well, where you can outsource those areas of your business and focus on actually driving deals, and let us come behind and keep everything updated and nice and pretty for you.
It's great. And it starts with the accounting, but the value can go beyond there. The advisory services that we can provide go beyond there, where a lot of times we can really help out that I would say most clients just don't know about it, is that fractional CFO services. And that's a pretty broad term, okay?
I can get a little more specific there.
Right. Really what that means is, not what your stereotypical, what you think your public accounting CPA firm preparing tax returns. This is your day-to-day, usually financial related, that you just need for the company. Anything. It can be really anything. Cash forecasting, creating lender packages, okay? KPI cadence, things like that. Analyzing deals. It can go beyond that. It's really about the financial health and decisions that your company is making. Do you have the data? And do you have the ability to create whatever is necessary for your company so that you have that timely? And that's really where the advisory service kind of takes that next step, is where can we help? You might be doing this yourself. You might have some people that work for you for do this, or maybe you're lacking, you don't have enough employees, okay? Or you're lacking the knowledge of how to put some of this together, okay? If you're not doing it cash forecasting, then how do you know what cash you're going to have in 6 to 12 months, okay? That's important. Are you winging it? All right? I know a lot of investors do, and hope that by winging it, they're going to get there. Maybe we should add a couple tools to your toolbox. Let's do some cash forecasting. That will give you more projections to make better decision. All right. If you're dealing with any kind of loans, you're going to be dealing with lenders, whether it's lender packages, whether it's compliance, whether it's putting things together. Maybe they need timely, quarterly financials. They're going to need certain information. It's really about, okay, that's very time consuming when you're dealing with this kind of stuff, but you got to realize from the lender bank side, they are lending $20 million. They want to make sure they're getting that back and they're going to get their payment. So there might be providing a lot of reporting requirements. Where can we help out in that kind of area? The KPI, which is the key performance indicators that I was talking about, are you even looking at them? Okay. Are they coming up? Is this something that you are constantly tracking? Without key performance indicators, how do you know how well your investment is doing? All right. So that's an area where a lot of times CPA can help by just providing frequent KPIs. Which ones are the most important to you? How do you calculate them? And can we provide them to you timely so that you have current information to make the best decisions possible? All right. And this all wraps up into, usually if you have investors, investor reporting and getting their information timely. This is where I talk about long-term goals can be slightly different here. Investors' most likely long-term goal is number one, I want my money back as soon as possible. Okay. And then after that, they want timely information to know that they're meeting the investment they have is meeting the goals that was sold to them when they first got into the investment and resulting in the rate of return back or greater than that they were kind of basically promised when they first got into this return. And so that usually means getting frequent investor reports. Most investors are going to want quarterly reports. Okay. There's a lot of softwares out there that can help you. What does an investor report look like? You might need help providing those in a timely manner with the information that your investors are looking for. And then, of course, we deal with this a lot, Kyle, but it's just timely K1 coordinating. Most of your investors want to be filing by the 4/15 deadline. They're going to need their K1s before 4/15, 2 weeks before 4/15 or more, so that they can get their K1s to their CPA so they can get it prepared, especially if there's state level things to consider there.
Oh, yes. Living some of that now in September here. It's good times. So I've been chomping at the bit since we got started on this call to talk through transaction support, and this is an area that really excites me. And so, this is another kind of pillar of the advisory services we can offer. Daniel, you and I see a lot of transactions to close, and far too often clients will bring us in too late in the deal. And we see a lot of deals, and we have a lot of input to offer here. So, I harp on this a lot in these videos if you keep up with our series, but keep us in the loop on things. So just in walking through some types of transactions that I've seen recently and kind of helped clients through, buy, sell side due diligence, both sides of the deal, going through all of that, looking at financial, broadly, not just from kind of that tax funnel, looking at financial information, lease implications, things like that, drilling that down to tax, getting you prepared for what that liability might be, all is encompassed in that due diligence process, and making sure whether you're on the sell side or buy side, everything's in compliance and it'll go squeaky clean as we go through here. Another thing we look at a lot, and it's very important from a broader financial perspective. Obviously, we bring in attorneys on this area too, just to shore up kind of the other half of our tandem, but looking at optimizing entity structures and making sure that the entity structure, how you file with the IRS and the states you're operating in, all of that aligns with your goals, what you're trying to accomplish, mitigate tax, achieve your financial objectives, all of that good stuff is encompassed in there.
I will say, Kyle, from experience, this is one that a lot of time gets to us either too late or two, an attorney does it and really only looking at it from the legal side.
Yeah.
Okay. It's very important to have a CPA in there just so that we understand legal protection is great. And I'm not talking down to any attorney. It just needs to be usually a discussion in tandem here between legal and a CPA so that you're getting the best of both worlds. You understand, okay, you're getting the full legal protection that you need, okay? But at the same time, understanding your tax consequences. You create a new LLC for every single rental property you have, yes, it's maximizing your legal. But what's the tax consequences with this? Or what's the tax consequences if I buy this real estate and I create a series LLC in a different state? Okay, what's those state laws? All right. Federal laws are going to be different than every state law. And so if it's a state outside of that attorney's jurisdiction, how does that affect it? Okay. So just realize there's a lot going on here. And this is where I see most mistakes are done is the structuring was done and then they're coming to us too late.
How do you fix it?
We can, yeah, and like maybe we can, maybe we can't, maybe we're just doing the best with what we could or trying to create better structuring going forward. So just kind of realize that. And there's a lot, especially in the real estate world, there's a lot of one size fit all entering structure that is sold to a lot of people. There's no such thing. Okay. Everyone's real estate investment is different. There are some that are more likely to be okay for everyone. That's a good plan, good structuring for a lot of people in a specific scenario. But do know that one size fit all plans can have really bad consequences because you might have something unique in your investment or in your long-term goals.
Woo, good stuff. All good points, Daniel. Yeah, so entity structuring is something I deal with just about on a daily basis, and very important. We're brought in on those conversations. The other big ticket item in the real estate space, we all know it, 1031 exchanges, right? And so, that gets lost, that we can advise on that as part of kind of that walk through the whole life cycle of a transaction. You have an exit, you have a gain event. How do we mitigate the gain? 1031 is the like kind of exchange as a potential strategy. Of course, there's strict compliance guardrails, timelines we have to meet. We're well versed in all of those rules. We have good kind of referral partners for helping to execute on 1031s. Yeah, there's a lot of value we can offer there. And then with all those strict compliance guidelines and timelines and things like that, you can go in fully intending to execute a 1031 exchange, and it could fall apart on day 1 or day 179, right, as you get up on the deadline. And so having someone on your team who can walk through, okay, if this goes south or something goes wrong here, what are some other strategies we can employ? How can we get around this? Is very helpful as you go through that. And then, as we talk through dealing with your investors and things like that, if you operate any sort of real estate fund or have outside investors and you're entering a sales event, each of your investors can have different goals. What does that look like? How can we structure a deal so that everybody can leave happy and accomplish the goals they want out of that exit? So those are all things that we typically advise on. And then I'm being long-winded here on transactions, so I'm just going to rattle off a few other things we see, in looking at strategic buy-sell exit analysis, ease. We can talk through those types of scenarios, doing lease analysis, looking at intangible and doc stamp analysis. Lots of different areas in, transactions within real estate that we can bring some expertise to the table on. So certainly keep that in mind as you walk through your investments and continue to grow your portfolio.
Yeah, and the buy, sell, and exit analysis, this is a big one that I see a lot for our clients.
I didn't give it enough love. Give it the love.
You didn't, just because the impact, the value it brings, okay? A lot of people create investments with a timeline and manner. I'm going to buy this, I'm going to hold it for X amount of years, and then I'm going to sell it, okay? But in reality is no one knows in 5 to 7 years, that's a standard hold period for a lot of people, for a lot of real estate, what the market's going to look like, what it's going to sell for, okay? And then they don't really know the impact it's going to have on them. So getting a buy and sell out there analysis helps our clients basically be like, all right, the goal was to buy this 5 to 7 years. I told my investors that the market crashed. We should not be selling this. We probably need to hold this. It probably makes more sense. Okay, now I need to go back to my investors, see what they say, show them the numbers, show that if we sell now, we are not going to meet our goals, and then we just had unfortunate timing. Okay, so this is where, or it can be the other way. I should say this. Sometimes I've seen it where it's like, it makes more sense to sell early. Okay, my goal was to hold it 10 years, and it's only been 5.
Let's get out of there.
Yeah, and I'm just
Yeah.
like, a rate of return is much higher than we thought. This property's selling high. In another 5 years, we might not get the rate of return that we do now. It makes more sense to sell now, just go ahead and realize the gains, and then let's get into a new deal.
And Daniel, you brought everything we've talked about into that scenario, right? And that gets back to kind of the whole life cycle because you talked about actually making a transaction decision. How do I then take that and communicate it to my investors? What, all of that stuff are things that we can have input on and add value to. So all of
And
that
then
excites me and is part of what the world we live in.
Yeah, no, it's true. And so let's wrap this up with a bow. Okay, so we've kind of talked about the strategic financial management. We talked about the transactional support, and the last part really is getting into what CPAs are the best for, and that's tax strategy and planning. Okay, and this is basically being proactive. Okay, so that you are thinking about all your tax strategy and tax planning to create the most tax effective way to do this. Real estate is packed with tax, just lots of tax strategy and planning that is at your disposal. But when to use it, how to be ready to use it. Real estate isn't bought and sold in a day. It takes time, okay? And it takes a lot of time to be planning to be able to take advantage of these or when to take advantage of it. So we talked about, when you're in real estate, it's the acquisition, it's the hold, it's the exit. All of those have different planning opportunities, and you need to be planning before they actually happen, before the acquisition, before the exit. The exit's a big one, okay? If you don't think about it until you actually do the exit, you might be missing a lot or not doing things correctly, okay? A lot of times with the acquisition, we're deciding, is a cost segregation, do we need one? Okay, what's the effect? Most people in real estate know what a cost segregation is. It's accelerating depreciation, so you can take a large deduction up front, okay? But there's a lot of moving pieces here, okay? If you have a lot of investors who are not real estate professionals, they might not be able to use this, okay? Is it worth the juice of getting a cost segregation? Because it does cost money. We got to think of all the factors there. All the passive losses going to get limited for the people in it. Are they real estate professionals? If it is a cost segregation, okay, now we need to figure out how that's going to get done and have it on a timely manner, or, when should we get it done? So there's a lot of things to think about there, a cost seg from that. And then during the hold, there's a lot of times there's not as much, tax planning that needs to get done, but you need to be thinking about the exit. You still need to be analyzing your investments, but there's also a lot of things you can do outside of just maybe that property. So this is a great time that we talk about a lot of estate and trust planning with our clients. Okay. You hold all these real estate, you have all this stuff, you have all these family entities. We talk about how buying and selling real estate can't happen in a day. Real estate, great generational wealth tool, but just like anything else, it has its disadvantages. And that is usually, when people die and they inherit it, they get step up basis. It's great. But now you have this huge illiquid asset.
Liquid.
Yeah, this huge illiquid asset that basically maybe the people, beneficiaries receiving it, want to run it or not. Real estate is not as passive as people like to think. It does take someone operating it. If it's not you, you have to pay somebody else to be doing it, okay? So how does that work to create generational wealth in your family and to basically maximize on skipping out on estate taxes and things like that? How do you create trust? Great time to put it in here. You also want to make sure while you're holding multi-state compliance, understand if I am creating state exposure, am I correctly registering in those states? Am I filing in those states? Am I paying all the taxes in those states? Every state's complicated, we talked about. So if you're buying real estate in a state, you need to understand what your multi-state compliance is. Or if I'm buying real estate in multiple states, how is that all going to work out for you?
Daniel, I have a lot of current client pain in this space, and it's in situations where we just got brought on too late, right? So being mindful on where your real estate you're operating is located, where if you operate in a fund structure, have investors, where your GP is located. Keeping in mind you could have state tax issues on exit. There's so many pieces to that get really, really messy. And to your point, it grounds a lot in, are you registered in the right places, and are you meeting each individual state's fairly rigorous compliance requirements in many cases. And we see, again, we've talked about this in other videos in this series, but we see where states are getting more and more aggressive in getting their slice of the pie on some of these deals. So this is an area that I don't think it's unreasonable to say is consistently overlooked and can create many, many headaches for you down the line.
I agree. The multi-state one that it's always an issue for everyone. Okay. It always will be. It's just, there's a lot of jurisdictions in the United States that you have to deal with. And some even at the local level. So it's not even just the state level. You might be talking about cities. You got New York cities, things in local municipalities and things you have to think about. So there's a lot here. I mean, we can't go over everything in the tax planning. The last thing I just probably want to go out is the sale is going to probably be one of the biggest events you always need to be planning for, the exit, okay? If you're going to do any kind of, tax strategy that is going to defer the gain, something like a 1031 exchange, things like that. We talked about this a little bit in the One Big Beautiful Bill, but opportunity zones are back. So if you're in one of those, how does that work out? Yeah. How does that work out? There's just a lot of options here. If you have investors, that's going to make doing a 1031 exchange more complicated because maybe not everyone does it. So then you have to look into maybe drop-in swaps. How does that work? We have to have a lot of time on your side. So if you are thinking about doing 1031 exchange and you want to sell your property in 30 days, then the drop-in swap's not available for you. So you need to understand these way before these happen. So always thinking about the exit and then what can we do to minimize that, because the less taxes you pay, the higher your ROI is. Okay, you got to consider that in your ROI. It's really what is the cash I receive back, not the cash I also have to pay to the government. So we want to lower that as much as possible.
Good deal, Daniel. All good points.
That kind of concludes just a very high level, quick into what basically advising we kind of provide here at James Moore when we're looking into our clients. It goes to a lot more than that, but just a quick kind of call to action. When you're looking at your real estate, make sure you're looking at your strategic financial management here, understanding what your resources are, what your long-term goals are, and where can someone like a CPA come in and kind of help you from that. The transactional support, a lot of CPAs can help you there. It's not just preparing the tax returns, okay? We can help on the due diligence side. We can help on doing buy and sell analysis. We can help on leasing and things like that, like in lease analysis and cash flows and that. And then making sure that you're just always frequently understanding what your tax strategy and your tax planning, and it should be an ongoing experience from the beginning to the end, okay? It's not something that just happens at the beginning and something that happens at the end. It needs to happen throughout the entire life of the asset and should be happen frequently so that you're fully understanding, taking full advantage of all of the tax planning that's involved. Thank you for tuning in today's episode. We hope you found our discussion insightful and valuable. If you enjoyed this episode, please subscribe as we produce frequent videos related to real estate. Join us next time for more expert insight, and tax strategies to help you maximize your real estate investments. Till then, stay informed, stay proactive, and happy investing.
To learn more about James Moore & Company's real estate accounting and business solutions, go to jmco.com. And don't forget to subscribe to our Real Estate Industry Update series to receive updates when new videos are released. If you'd like to be a guest, or if there's a topic you'd like to see covered on a future episode, contact us through our website or email us at info@jmco.com. You can also follow us on social media for more news as the landscape of real estate continues to rapidly evolve.